Well, as you mentioned, I'm joined by Lance Krowitz from Stanlib here in our little studio at the JSE, and we're talking about two of his favorite stocks. And the first one is Zeder Investments. It's focused on agricultural companies. It's an investment company. Obviously, people have to eat. Apart from that, why would people want to put their money into Zeder Investments?
Morning, yeah. It's quite an interesting play, investment holding company that invests primarily in food producers. They've got investments in one or two listed companies. But for the most part, Zeder's plan originally was to kind of pull together many of the unlisted food producers. A lot of the food production that goes on in this country happens in co-ops, which are really outside of the scope of mainstream investing. And most investors, you can generally buy or trade those things over the counter, but they're very hard to come by, very difficult to trade. You don't get proper price discovery on those things. So Zeder's whole proposition is compelling because they were going to take investments in those things. They have good linkages into the farmers groups and the co-ops and those sorts of environments, and they can bring those things to the listed bourse.
When you look at Zeder's portfolio of investments, it's got that big pioneer exposure. How big of a problem is that for the company?
Well, Zeder owns, I think the number is about 35% of Pioneer via a couple of routes. And so it's not really a problem, I guess. Pioneer is probably the third largest producer of food, and they play in one or two, in kind of first or second place in most of their product ranges. Brands, kind of like Beukes and that sort of thing. So well-known brands. They're a big bread producer. They're a big egg producer. It's not a problem. We know the problems that Pioneer's gone through of late with the Competition Commission. There potentially is a kind of a dark cloud on the horizon just in terms of an additional fine that they might have to pay. They've provided for that. Management's been changed. The whole board's been changed. But you can't discard the fact that they're still a large, massive food producer in this country. They're going to remain a massive food producer. This certainly is not going to put them out of business. So potentially the price weakness is an opportunity.
And Zeder's got its portfolio updates in October. Do you see them sort of exiting a bit out of that pioneer exposure, or do you see their portfolio changing significantly?
I don't. I think Zeder's plan is to, they've got a large chunk of Pioneer, but I think their plan is to perhaps weight that down slightly, but only by increasing their holdings in other companies, in other co-ops, in other areas.
I also wanted to get your view just on a possible trend that we could be seeing with RCM coming to the fore with its Caliber product, and just if there is a trend in terms of closed-end specialist investment houses investing in unlisted companies like Zeder does. Certainly,
there's a lot of interest in that at the moment. If you kind of look down the JSE at some of the smaller companies, some of the smaller listed companies are trading at very cheap multiples. And Caliber, I think Caliber will look at both the unlisted space and the smaller listed space, and will take advantage of the kind of relative price discrepancy between the two. So where the value might lie in the listed or the unlisted space, that's where they'll attack. And provided they can potentially delist some of the smaller listed companies, or buy into the unlisted ones and bring them to a listing some years down the line. We'll have to wait and see what their success rate. But certainly is a lot more interest in that sort of space at the moment.
Very quickly, moving over to another stock that you are looking at now is Hudaco Industries. Obviously very reliant on GDP growth, and the strong rand playing an important factor in that company's growth story.
Yeah, Hudaco has agencies for foreign supplies of largely industrial consumables, industrial and mining. They supply things like bearings, steel bearings to manufacturing and to the mining industry. They supply, they've got a range of diesel engines, Deutz diesel engines that they supply mainly to the mines, things like that. So they're not really concerned with companies expanding their capacity. They're more concerned with companies keeping their machinery running. And that's where Hudaco comes in. Hudaco supplies all the consumables. So when the things get worn out, the mines, for example, can't allow their machinery to stand idle, so they've got to have stock, and they supply it straight away. The exchange rate does play a part. They adjust their prices in accordance with the exchange rate. They pass that on to their clients, whether it moves up or it moves down, and that obviously has an effect on their their rand earnings, their rand profits as they change. Their margins, generally speaking, don't change. So a very dependable kind of boring company, if you like. They do what they do, and they will continue to look for new agencies, for new products to expand their product range. But you've got an old set of management that's not necessarily speaking to their ages, but certainly they've been around for a long time. They've been doing this a long time. It's one of those kind of steady performers. They pay their dividends, they manage their company, they carry on doing the same thing. It's boring, and it's one of those you can kind of stick in the bottom drawer.